Trading bullish and bearish divergences is by far my favorite trading confluence. When I first started trading, there were two main people that I learned from, okay? It was CryptoFace and it was Jason Casper. So I have to give kudos to them off the bat because without them, I would not be the trader that I am today. And a big part of that is due to divergences. So in this video, I'm going to jump through exactly how to actually trade them. Now, again, when you're trading, it's very important to understand that when you're using any sort of confluence, whether divergences, key level, golden pocket fib, you're not going to have a 100% win rate, okay? These confluences will give you a statistical edge. That is all trading is. It is a statistical edge. If you are trading with a 1-to-1 risk to reward and you have a 51% win rate, you are by definition a profitable trader. So will every single trade be a winner with this strategy? No. All right, enough of me yapping. Let's jump into the video. Make sure to leave a like if you enjoy. You will see that I always have my key levels identified in advance, as well as what I want to see on the oscillator. Now, the oscillator that I'm going to be using to find these bullish and bearish divergences is called the Easy Oscillator. If you want access, you can click the first link in the description below. Yes, this is a paid indicator. This is one that I've created myself. There is a free alternative though. If you look up Wu Manchu Cypher B on TradingView, you can get pretty much the same thing for free. The only difference is that I'm not a fan of the lagging divergences. So not only on my setups do I have the levels that I'm looking at in advance, I also draw what I want to see on the oscillator. Let me give you a better example. Okay, so here was my ETH long setup. Okay, I have my level marked in advance, and on the oscillator, I want to see a bullish divergence. There are two main scenarios when I use these divergences that work best, because if we take a look at the chart here, let's go to Bitcoin on the 6 hour. Okay, if we just look at the general divergences here, right? We have a bearish divergence here that didn't really do anything. We have another bearish divergence, we get to move down. Another bearish divergence, move down. Look left, another bearish divergence, didn't really do anything. More bearish divergences, doesn't really do anything. Okay, here we see, more bullish divergences, didn't really do much. This bullish divergence was really great, right? We got that sniper entry here before that big move up. Now, I like to use a multi-time frame divergence analysis. So the main time frames that I use, guys, are the 4-hour time frame down to a 15-minute and down to a 5-minute. The 4-hour time frame is where you do your technical analysis, right? Finding those key zones, finding those golden pocket fibs, finding those lows that we may potentially sweep with those other confluences. Once I have a key level in mind, I will look for an overbought or oversold on the oscillator, meaning the oscillator is approaching the oversold or it is approaching the overbought. We use the 15-minute and the 5-minute to get our entry. If you're brand new to trading, I would not go below the 15-minute. So we're going to call this a 4-hour 15-minute strategy. Okay, this is just a textbook setup of what I like to see when I'm entering, guys. So I have my key level marked out. Okay, this is the major golden pocket. It's also a key support zone. As we're approaching this zone on the 4-hour time frame, the oscillator is approaching that oversold zone. So what I'm going to do is jump to the 15-minute, look for a sweep into that level with bullish divergences here on the 15-minute time frame. Again, if we look left here, we can see we had some bullish divergences before, but the reason these divergences didn't play out as we would like is because on a higher time frame, we're not at our key level. So we want to make sure that price is coming to a higher time frame level that we have marked out. Wait for those bullish divergences, wait for a reclaim of that level. You can see the trend bar flips blue here on the easy algo. We have a mild buy signal. Bullish divergences confirmed. This is your entry trigger. This is your long entry. Okay, you're targeting these highs, at least move the trade to break even. So even if you're targeting, external highs up here, this trade is now risk-free. So this is a 1-to-5 risk to reward. Maybe you can take half here if you'd like at the most recent high, but this is an example of a trade that I would take. Now let's jump into the other scenario. Okay, I'm going to use the 4-hour time frame here. So I just said that whenever I use divergences, I wait for price to be at a key level. Okay, another instance where I like to use these divergences is for swing failure patterns. Let's say you have a fairly prominent high. Okay, we have this high here. I'll wait for price to come above that high. Okay, breakout traders are going long and take their liquidity. And this is where I'll be looking to enter a short position after a swing failure pattern of that high. Now, a swing failure pattern only works when you have bearish divergences in this case because it's a short. So opposite for long, right? You wait for a sweep of that low, bullish divergences. So this most recent example here on the 4-hour time frame on Bitcoin is just a picture perfect example of a trade that I would take. Okay, we have this high here. We break above this high momentarily. As you can see, we're not displacing above this high, right? We're not breaking this high with volume, okay? We're not breaking this high with fair value gaps. We kind of consolidate right above this high. We're seeing rejection candlesticks here telling us that, okay, buyers are weak. Even though we've already broken this high, if we go to a daily time frame, this could be a swing failure pattern, which it was. So in this case, what we're going to look for is a bearish divergence. Okay, so momentum is decreasing as price is making a higher high. As soon as we lose this high and get a candle close below this high, the trend bar flips bearish on the algo. Okay, this would be a good short idea. Okay, and you'd be targeting these lows. Okay, so that's a 3 risk reward on a swing failure pattern short. So again, there's 2 ways that I mainly use these. One is using a higher time frame key level. Let's say this is a key level of resistance. Okay, then we sweep down into this level where price is making a lower low, and we see on the oscillator we're making a higher low into that key level. That is when I'll enter a long position on a 15-minute time frame, assuming that the 4-hour is also oversold. And the other scenario that I use is a swing failure pattern. That's what I just showed you guys, right? So you have one high, you break above that high, and as you're failing that high, you don't displace above that high, you don't break above this high with strength. Okay, you kind of consolidate above this high, and then we fail this high with bearish divergences. That's going to be another way that I like to use these bullish and bearish divergences to help me enter a trade. On their own, divergences are powerful. Okay, they're very powerful on their own. If you have a daily bias in mind, if price is at a level, I can see here, in this case, bias is bullish, right? So we're getting bullish divs, price goes up. More bullish divs here, price goes up. But you will occasionally have these divergences that don't play out. And this is why you need to be trading at key levels. You need to have a bias in mind, and you need to be using a multi-time frame analysis, meaning looking for the oscillator overbought or oversold on a 4-hour and then jumping down to a lower time frame for entry. Because even if we were to take this trade here, that's not at any sort of key level, right? If we go to like a 4-hour time frame and we look at where this trade was, this is not a high probability trade. Even though we would have made a little bit of money here if we had taken profits, the risk to reward is not great. We had this strong displacement move down telling us that sellers are in control. After just sweeping the high, this is not a high probability long setup. So we want to be looking for those key levels, right? Zooming out to a 4-hour, waiting for key lows to be swept, right? This is where you start stacking your confluences. You have key lows, they get swept into our high time frame area of interest, into our high time frame golden pocket fib. Then we go down to a lower time frame to take the trade. Okay, let me show you an example of a trade that did not work. Okay, I also posted this inside of the pro discord. Okay, this was a Pengu long that I was looking to take. Okay, so I have 2 ideas here. Okay, one of which is already invalidated. So if you were to have taken this trade, you would have been stopped out. Again, we do have losses too, guys. But the great thing about this is that our risk to reward is a 6. Okay, so we're risking 1 to make 6. I didn't personally take the setup, but this would have been a valid setup, and it did happen to get stopped out. Okay, this was the local golden pocket fib. We're also retesting some lows. Again, this is not an ideal setup. We didn't have any 4-hour confluence here. If you go to the 4-hour time frame, the oscillator isn't anywhere near that oversold zone. Okay, we didn't even get the bullish divs on the 15-minute. We did get divergences on the 5-minute though. So, it comes down into our level, we get that reversal buy signal on the algo. Maybe you take this trade, okay, with the 5-minute bullish divergences as your entry model. That being said, there is another key level on Pengu that I'm looking to long, and that is directly below that. This is a more high probability setup. We have our major golden pocket fib from the all-time low to the most recent high. We can see that price is displacing to the upside. You can also see we have this key horizontal level here, our area of interest that acted as support. So if we get a sweep into this level with divergences on the 15-minute time frame, I will look to enter a long position. So this is actually shaping up to be a pretty good long. I want to see this curl over a bit and then see another sweep. So maybe price can do something like this, giving time for the oscillator to reset, print that buy dot, and then we get another sweep down. Okay, this is also, accumulation, manipulation, distribution. That's a whole nother thing. They all go hand in hand, right? So I've been waiting for price to consolidate here, see one more sweep, creating a bullish div on the oscillator, and that would be my entry criteria for Pengu. Okay, this is a live setup that I am interested in taking. Okay, I'll share with you guys another swing long setup actually here on Solana. In this case, I'm anticipating a bullish divergence, so I'm already long. I have my DCA levels here. I want to see Solana consolidate here, maybe print a buy dot, and then get another sweep down, filling my DCAs with a bullish divergence. If we take a look at ETH, again, I'll go to the level that I had marked out earlier. Okay, this was the key level for ETH. I see we're coming down into this level. We'll go into replay mode here. Okay, boom, 4-hour is oversold. Now we're gonna go to the 15-minute, look for some strength here. Okay, here we go. We can see we have some bullish divergences here on the 15-minute. We'll let price play out. We want to see some sort of bullish reaction. There we go. That is where I'd enter the trade. Swept this most recent low, made a bullish divergence, even down to a 5-minute. I bet we would have had bullish divergences as well. This is where I would enter the trade on the 15-minute. Move trade to break even, or at least TP1 at this high here. So almost a 3 risk to reward there. So again, all the risk to rewards, guys, when you're entering on a lower time frame using these higher time frame levels is going to be a minimum 1 to 3, a minimum risking 1 to make 3. So you only need like a 36% win rate to be profitable with a 1 to 3. And that doesn't include break even. So, a lot of the times I'll move my stop loss to break even. Let's say at a 1 to 1 or a 1 to 2, I'll move my stop loss to break even. So now if price comes back down to my entry, I don't win, but I don't lose. Okay, I'm preserving my wealth, I'm preserving my capital, and then I can look for another setup. So to conclude this video, okay, how to trade divergences. I use a multi-time frame analysis. Okay, I use the 4-hour time frame for the bias, for the levels, etc. And then 15-minute is going to be my entry. This is the time frame that I use to enter with the divergences. I want to see price sweeping into a key level with the oscillator making higher lows. Opposite is true for a short position. And I use the 4-hour oscillator approaching the overbought or oversold zone as another piece of confluence. If you guys enjoyed this video, make sure to leave a like, subscribe to the channel for more trading content. Leave a comment below if you found value from this video. Again, click the first link in the description below if you want access to my pro group. And I'll see you guys next video.